Thank you for joining us. This is midweek edition of Business Morning. Welcome to the program. I'm Chimeze Obi Iwago. The Vice President, Yemi Osinbajo, has assured that works are ongoing across the Federation in the areas of infrastructure and socio-economic development. The Vice President, who spoke at the 23rd edition of the Nigerian Economic Summit in Abuja, explains that the projects and other initiatives are being implemented in collaboration with the private sector. And the latest World Economic Outlook report just released by the International Monetary Fund in Washington, D.C., with some good news and some bad news. Now, the good news is that the global economy is improving, and the bad news is that the recovery is soft and yet to include the majority of people around the world. Channel's Business News editor Bosun Omofaye reports on how Africa fits into the new outlook for 2017 and 2018.
Now, the global economy is expected to grow additional 0.1% to 3.7% in 2018, according to the latest World Economic Report released today by the International Monetary Fund and the World Bank here in Washington. But this recovery is still soft.
For 2017, most of our upgrade owes to brighter prospects for the advanced economies, whereas for 2018's positive revision, emerging market and developing economies play a relatively bigger role. Notably, we expect sub-Saharan Africa, where growth in per capita incomes has on average stalled for the past 2 years, to improve overall in 2018.
For Africa's largest economies, Nigeria and South Africa, including Angola, depending on oil and agriculture, the forecast is that the growth in 2017 and 2018 would be far stronger than before, despite the risks from the global oil market.
What we see for the headline numbers is a pickup in growth this year, a better outcome, which is largely driven by the larger economies, Nigeria, South Africa, and Angola, where one of factors that had been weighing on growth, particularly weighing on growth, are dissipating and allowing for a somewhat better outcome, but not necessarily a very strong one. In particular, in the case of Nigeria, stronger oil production after the problems in the Niger Delta last year are dissipating. Better agriculture production are playing a role. Likewise, in South Africa, a rebound in agricultural production as drought conditions in the broader region have eased, and stronger mining output are helping.
Now, down the rest of the week, there will be various regional discussions and meetings and briefings here in Washington, D.C. that will focus on specific issues concerning Africa, Middle East, Latin America, and even Europe. All this week from Washington, D.C., Bosun Omofaye for Channels Television News.
All right, let's get to listen to the Vice President Yemi Osinbajo speak on Nigeria's economic development.
It's difficult to cover the whole range of what is going on. But I want to say that if you look at what's going on in infrastructure, for example, it's clear that we need adequate infrastructure to be able to drive the growth that we're talking about. And so we're investing heavily in railways. We're investing, for example, I'm sure you're aware that the Lagos-Kano rail project is on. The concession of the narrow gauge, Lagos-Kano narrow gauge is one that we're working with General Electric. And that's a huge project, and we expect that it will be driven by cargo transportation. We're also doing the Lagos-Calabar as well. So there's quite a bit of focus on infrastructure. We're also, as you heard, concessioning our ports. We're building the road networks, we're building like all of the road networks. We're investing, as you've heard, on infrastructure, and our capital spend was close to ₦1 trillion. So there's quite a bit of work going on infrastructure. Now, with respect to developing education and skills, with respect to developing skills, there are several initiatives. Overhauling the entire educational system is a long-term one, and of course we have a plan to do that. If you look at even the recovery and growth plan, that is clearly there. But that's a much more long-term thing. In the short term, we're looking at vocational education. And we're ramping up vocational education in various various institutions. The Ministry of Education has been mandated to look at how relevant vocational education, especially with private sector involvement. There is some work that we're doing, especially in the power sector, with Siemens, for example. They have a power academy. There's some work going on there looking at how to develop middle cadre competence in the power sector. We're also looking at how to develop middle cadre building skills. You know, Dangote is working with us on an academy in that respect as well. There's a need for some quick fixes. There's a need to quickly fill the gaps, especially in industry that is growing quickly. But there's also a long-term plan that really has to just go through its normal course, and you really can't speed that up in any significant way. It just has to run its course.
That was Professor Yemi Osinbajo, the Vice President of the Federal Republic of Nigeria. We move on now to the market. The equities market halted the 4-day gaining streak on Tuesday, with the all-share index depreciating by 0.15% to close at 36,776.60 points, as investors took profit on previous gains. The industrial goods index recorded the largest loss, followed by the banking and consumer goods indices, as investors took profit in the shares of WAPCO, GTBank, and Nigerian breweries. On the other hand, the insurance and oil and gas indices recorded gains, as investors demanded for the shares of Mansard and Oando. Market breadth was flat, with 19 gainers and, of course, 19 losers. However, total volume traded increased by 34.72% to 353.14 million units, valued at 3.26 billion naira, and exchanged in 4,201 deals. Well, notwithstanding Tuesday's loss, analysts believe the market remains relatively strong, supported by broadly bullish outlook for the economy and corporate earnings in the third quarter of the year. And at the unlisted securities markets, the index was down 0.57%. The market capitalization closed at 400.03 billion naira. And in 23 deals, investors put in over 1 million naira to purchase about 216,488 securities.